Joining us right now to talk markets and specifically the behavior he's seeing from retail investors is Joe Mazzola. He is Charles Schwab Director of Trading Services Education. And Joe, let's pick up where Mike just left off. He just talked about this idea that retail investors are really embracing risk right now and trading a lot of options and other things. Is that how you see it?
Hey, Becky, good morning. To a certain extent, I can agree with Mike on that. What I would say, though, is, we have a monthly activity index. It's called the STAX, so the Schwab Trading Activity Index. And what it does is it measures behavior. So it's behavioral, not attitudinal. And what we're seeing is we did see an uptick in February relative to January. But I do want to take a step back and say the uptick that we saw is still moderately low compared to some of the highs that we saw in 2021. And what's interesting is when we look at that number itself, it takes into account, as Mike was talking about, options. It takes into account, levered ETFs. And what we're seeing right now is clients are long, right? They're long the market. They're buying dips or they're buying equities, but they're not levering up. And I think that's a key point to make is that we're not seeing FOMO with our clients at this point. What we're seeing is they're long the market, they're selective in their buying, and they're choosing information technology. That's the sector that they're really hitting up right now.
Well, that fits into the other part that Mike was saying, that maybe we're in the belief sector of a bull market, not the euphoria sector yet.
No, I 100% agree with that. I think that there is this belief. What I look at is, as opposed to the flash number itself, I look at the trend. We got a 4-month trend that really, bottomed in October, November. We're kind of riding that trend where I believe that investors are feeling more confident. But like I said, they're selective in their buying. They're not buying across the board. You guys had mentioned the mega caps, and can this rally continue without the mega caps? I think it can, because at least what we're seeing from our investors is they've kind of shifted a little bit more towards the chips. So the big buys that we saw, NVIDIA, AMD, SMCI, ARM, they're trying to ride that momentum, that AI momentum. How long that lasts, we'll see. But they've been successful so far.
If your monthly tracking index called STAX looks at whether people are using margin, and I guess that gives it a higher rating, it usually comes in around a 35 to a 70, falls somewhere in there.
Correct.
More margin activity would give it a higher number. Does a higher number also correlate with bad things potentially happening in the market as people get more and more leveraged and something breaks?
I mean, I don't know if you can make that direct correlation, but what I would say is this is why I feel, as Mike was saying, and as you were mentioning, it's the belief stage as opposed to the reach stage, right? The reach stage is when we start seeing the levering up, the dipping into margin, buying the levered ETFs, and then, really high call activity in the options market. I think we are starting to see a little bit of that call activity in the options market. I just kind of look at, what we see on the SIBO put call ratio. And, while it's not showing something in the 40s where I would be concerned, we're right around 60 right now. It does show that, that there is reaching. The one thing that does give me a little bit of a pause is the lack of hedging activity. And I'm seeing that on an institutional and retail side. It's hard because as a hedger, you've lost money for the last 2 years hedging. So I understand where clients, whether it's institutional or retail, don't want to pay for those hedges. But I do think, though, when you see the markets at all-time highs, you see, breadth kind of flattening out, and then you see a little bit divergence maybe on the relative strength. It probably makes a little bit of sense right now to look for some of that hedging.
Yeah, I mean, how would you, if this is not near the peaks you saw back in 2020, 2021, where is it? We haven't even put a number on what the STAX is showing you right now.
Yeah. So right now we're at 47.65, and that is up about 3 points from where we were in January. The all-time high was, as you mentioned, in the 70s, and that was in 2021. So we got a ways to go before we get to that. And I think what's important to recognize when you're looking at the stacks relative to, say, the S&P 500. The stacks can go up with the S&P 500, but if the ascent is slower than the S&P 500, that means that clients are still long and they're still buying. But, as I mentioned earlier, they're not reaching and they're not levering up to do so. And in this market, I think that's wise.